Alright, so let's go over some of the trades that I took these past few days. I think like these past 3 days or so. So I have two accounts that I'm focusing on right now. I have one eval account with Top Step, and then I decided to do a straight to funded account through I think it's Take One Trader. So we'll go over the trades that I did on both of those accounts. So as you can see, all right. So if we just go one by one, let's go with the eval first. All right. So with the eval, since I did take more trades on the eval, all right, so we had a total of 5 trades, all right, but I'm only going to go over these last 2 trades, all right. So we had this large trade here, all right, and then we had a big loss the next day, and then normally before I would take a loss like this, get frustrated, try to make it back, but instead I decided to just lean on the data. I understood that over these next couple of days I should make it back, and that's exactly what I did. All right, so well, Friday there was no trades. All right, Monday no trades for me. All right, and then on Tuesday I had a small trade. All right, and then on Wednesday I had another solid trade, and then today we had a trade during I believe it was London session. All right, so it was a pretty good trade. So this is the trade that we'll go over, and we took that same trade on the funded account as well. All right, and then on the funded account we had the same trade for 247. All right, so very conscious of risk management, as you can tell, aiming for about 250 per trade, 250 to 500 depending on the setup. All right, so we'll go a little bit more in depth on that later on in the video. All right, so the first trade that we did take, all right, so was this onion play. All right, so let's kind of break it down. So I have it here. So if we go to the daily, all right, so as you can tell on the daily, we're obviously bearish for the day. We have this large move to the downside. All right, so if we drop down to the 1 hour, I can still see that we are bearish, all right, on the 1 hour as well. All right, so normally what I would like to do is I come on the 1 hour, create my zones here, another one here. All right, and then all I would do is just drop down to the smaller time frames, and then I would just keep adjusting my zones. All right, so as you can see right now, let's just ignore those. All right, so right now we're coming down, all right, on the 15-minute, and then I noticed on the 1 hour we had this strong wick, right? So if we bring back our levels, so we had this strong wick, right? So if we let price scoot up a little bit, all right, so we're in this range, and then we finally break this range, right? We finally break the range. Right now, what I want to see once we break this range, I want to see price create a new support, and then I would enter on the break of that candle. All right, so as you can see here, my thought process behind this is once I seen that this 1 hour candle created this wick, and then we had this strong move up, and then the previous candle created this large bottom wick, I knew that we had a good chance of coming back up and clearing all this space up here. We have these PD arrays. We have this 1 hour fair value gap here, another 1 hour fair value gap here. All right, just some key areas that I can see price going back and wanting to fill before it continues to the downside if it chooses to. All right, so if we drop back down to the 15-minute, all right, once I've seen this break of the of this structure here, all right, so as you can see, I look for buys above. All right, so we had price create this low, all right, and then as once price created a new support, my entry was on the break of this candle here. All right, so if we draw back to the picture, as you can see, that's where my entry was at. All right, so what this setup is, it is the breakout also with an onion. All right, so we have the breakout, all right, but when it breaks out, well, this is the setup that we're looking for. Price comes down, creates a new support, all right, and then we enter on the break of this candle. All right, now normally you would want to have your buy stops at the high of the candle, all right, but for this move, I was willing to get an entry here. That way I can place my stop loss here, and if price did reverse on me and take me out, then it'd be a small loss instead of placing my buy stops at the high here and having a larger stop loss, right? So that way, that was the reason why I instead of entering up here, I placed it here. So if we were to forward, all right, so as you can see, once we entered, price shoots up, all right, and then eventually we got taken out for a take profit. All right, so our TP1 was at the high of this previous candle, TP2 was at this range here. All right, now with this trade, due to the spread on was it take one trader or top one trader, it did hit my TP but did take me out of the trade. So I'll show you guys a video of how that trade played out, so you can kind of see what I'm talking about, and then we'll go into depth on the next trade. Alright, so that was that trade. Alright, so on to the next one. So the next one was a inverted celery. Alright, so as you can see here, alright, so we had price come down, create this long exhaustion wick. Alright, so my thought process with this, once I seen this wick, I knew that we were gonna go back to the upside because the daily bias was bullish. Alright, so I was previously expecting to see price break through this range, and then I was gonna look for an onion setup once it did break through this range. So let's just drop onto the trading view so you can get a better representation of what I was talking about. So as you can see, so if we back it up a little bit. Alright, so boom, so we had that, right? So as you can see on the 1 hour, it's creating this long exhaustion wick. Alright, and then previously, once it did hit this wick, right, if we were to fix our zones, alright, once it did hit this wick previously, the price ended up going right back up, right? So I was looking for that same setup. I wanted to see the new hourly candle open up, create a bottom wick, and then I was gonna put my buy stops at the break of the previous candle, alright, and then ride the wave to the upside, seeing price clear this range, right? So once I seen this price create this bottom wick on the 15, all right, I placed my entry at the break of this candle. Normally you would want to have it at the break of the high, right? But again, I wanted to make sure that my stop loss wasn't I didn't have a big stop loss, right? Because I'm trying to be very conscious of my risk management on the funded accounts as well as the eval accounts. All right, so I was willing to jump in here because I knew that I would risk a little bit less, all right, and I would be able to add on more contracts on my eval. So that was the thought process behind that. So once we did get entered on this candle, all right, I'll show you all the video now on how that play or how this play ended up playing out. But before I do that, give you guys a good visual representation of the setup. All right, so this is the inverted celery. All right, so as you can see, we had price come down, create that wick. All right, and then we want to enter on the break of the high of the previous candle. So once that new candle opens on the 15-minute, we want to see price first come down, and as it comes down, we'll enter on the break of the high of the previous candle. And then if you would like to, you can also enter on the break of the current candle's high, right? So if price comes down, creates that the new low on the current candle, you can place your buy stops at the current candle high and then ride price up. All right, either one works. I prefer to put it at the break of the previous candle. All right, so I'll show you all the video of how that played out now. All right, so those are my trades for the last 2 days. All right, so we had 2 wins. All right, so right now we're sitting at a win rate of 75% amongst both accounts. All right, so if we just go into the eval account, we're sitting at about 66.67%. All right, let's just say 67%. All right, with a good profit factor. All right, so we're super close to passing this eval and then having another funded account. And then on the straight to funded account, we are sitting at 100% since I have only taken 2 trades. Of course, I don't expect to stay at 100% for long. All right, but the main goal is just staying consistent and avoiding the tilt. All right, so keeping this account as long as possible and stacking these small base hits. All right. If you have any other questions regarding the way I trade, I post backtesting videos. You guys can check those out. I'll tag them at the end of this video. Peace.